Hey traders, and as promised in the last clip, we'll be taking you through setting up your stop loss and your take profit. Just to cover the abbreviations, it is important to know that TP is take profit. All right, and that is where our trade will exit at a positive or a win, and then SL is stop loss. That is where the trade will exit at a loss if the trade doesn't go according to our prediction. All right, so what we're going to do is we're going to draw our chart, and what you can see on this is an upward trend. All right, and what we're going to do is we're going to look for an entry and an exit on this upward trend. Being an upward trend, we're going to try and ride the trend wave, and we're going to look for a long position. We're going to look to buy as the price increases. So what we're going to do, say now we want to enter at this point over here at its low on the support line. So we'll set our stop loss just below that, and we'll hit our TP somewhere over there. Essentially, this would have been profit. All right, so it's pretty simple. On the upward trend, we're going to be looking for a long position. We're going to be looking to buy. We're going to enter our point at the lowest point closest to the support line. We're going to set our stop loss just below that, and we'll set our take profit at the top over there before we see a drop in price again. I'll take you through that in the live chart in a moment, so make sure you continue watching, and we'll be using a risk to reward ratio of 2.5 to 1. Great, just another example is a downward trend. So we're going to be looking to sell on this trend, right? Remember, there's three market structures: the upward, downward. This is a downward trend, right? We've got our support line over there. You'll see there's some fake breaks, right? But essentially what we're going to be doing is we're going to be looking for an entry and an exit point. Okay, so the entry point, we're going to be looking to go short. We're going to be looking to go for a sell. We're going to enter somewhere over there. Okay, our take profit will be somewhere over there. Let me just correct that, it doesn't give you a good idea, right? And our stop loss is going to be somewhere over here, just above the entry point. All right, we want to keep our stop loss as close as possible, as tight as possible, but also as safe as possible. You don't want to have a greater loss than what you need to, as well as you need to be confident in your setup, and you need to know that your risk to reward ratio will always allow you to grow your account steadily. So we've got a downward trend. We're looking for a sell position. We'll enter over here. We'll exit at a profit over here. Our stop loss will be set just above it. So essentially, this over here would be profit. A successful trade. Great. Lastly, the last market structure. All right, we've got a ranging structure. Set our support at the bottom, our resistance at the top. Okay, if you are looking to have a trade on this, usually it would be best to have an opportunity for a breakout, right, where we'll see it going out and breaking the resistance. or you could look for your pullback trade, which would be this over here. All right, same on this position over here. That would be a pullback trade off of the support line and back up to over there. It's important to know where your resistance line is. You could also call it a defense line. Some traders will refer to it as a defense line. Reason why is it's more than likely going to come back off of that and move in the opposite direction again. So when setting this trade up, it's important to take note of the defense line. All right, so let's say for an example on this, we would want to enter our long position over there. All right, we'll take profit somewhere over there, and our stop loss would be just under where we had seen the previous break. All right, so that was a fake break that we saw in this exact example. Essentially, if you were looking for a sell, going short, you'd enter over there, you'll take profit over there, and our TP would be just above that fake break. Once again, using the risk to reward ratio of 2.5 to 1 to make sure that you're always growing your account steadily despite having a stop loss hit. Now, hitting your stop loss is totally normal, it's totally okay. The best traders in the world even hit their stop loss. We are not fortune tellers, we are just basing our analysis of the highest probability in entering a trade based on our analysis, looking for the highest probability on the move. In the next clip, we'll be covering breakouts and we'll be covering the actual pullback trade and showing you exactly how to set that setup and what to look for. We'll also be covering a retest for a breakout to make sure that it's not a fake breakout. Most amateur traders will enter a breakout position on the first bar, which is very risky, and it's always important to do a retest or to allow for a retest to make sure that that move is in fact actually happening and is not a fake breakout. Right, subscribe if you like this content, give it a thumbs up, and we'll see you in the future clip. Great, so we're going to head into the live chart now to show you real examples on the live chart. Remember, it looks very different to an illustration or to textbook illustration. So it's important to subscribe to our channel now to stay close, go on this journey with us. If you like it, make sure you hit the like button, give it a thumbs up, and we'll take you over to the live charts now. Right guys, so we are on the USD Swiss franc chart, and we're on the daily time frame. In a later clip, we'll be going over some advanced techniques, and that will cover working from a higher time frame to a lower time frame. Essentially, on this higher time frame, we are going to be looking at doing a support line, and if you look at this zone over here, there seems to be quite a bit of tug of war between the bulls and the bears, and this was over a couple of days, which proves to be a very strong support line with a couple of fake breaks, and then we had a massive upward move. So this definitely proves to be a strong support line. Let's see what it provides for us in a smaller time frame. That's the only one I'm going to be marking off for now. So let's move over to the 4 hour. So in the 4 hour, we can see that we had a downward trend, hit this support, and it's now in a couple of multiple touches, which once again is one of the rules that makes it a very strong support. And we saw an upward trend. So we're on an upward trend now. We're going to be looking for a buy position, but let's just draw our trend line to the top. Okay, you'll see there's a little fake break over there, and we saw a massive jump up, and another topic is the incision of trend lines, and that is where you'll see the most volatile jumps. So something like this over here, where there would be an incision, where it would be
meeting of the one support line and another, or the intersection, you'll see usually a massive or volatile move from that point onwards. But let's get into the smaller time frame. Alright. You can see it sort of worked on the smaller time frame as well. And it's currently at that point. So little fake break there. Other than that, it stayed quite far away, but some nice climb from that point onwards. Worked over here, worked over there, a little fake break over there, fake break over there, but it worked pretty well over there. Let's see what happens. We're going to look for a long position. Alright, we've seen another break. We're not going to jump into it. We are pro traders. We are going to wait to see what it does. Alright, so it's come back in. Imagine taking a short position here and seeing it going back up. You're not going to be too happy with that. Alright, so we're pretty confident that this is going to go up because we've seen it move back into the zone. We've seen it happen twice before, 3 times before on this current chart. Alright, so what we're going to do, we're going to open up a position. Let's put it over there. Alright, and we're going to be using our ATR to work out our stop loss. We're going to have one ATR as a stop loss. Alright, so that'll do. Okay, and we're going to have 2.5 ratio. Will do as well. Alright, so let's see what this trade does. We're going to enter our position here. We are right in the upward trend. Right, we've marked our support line. It's an upward trend line. We've had multiple fake breaks with a nice good move, and we're predicting at this point the price should go up. We've entered our stop loss. We've entered our, so we've got a 24 pip win and a 9.3 loss at hands. Let's go forward in time and see what happens. It's close to our stop loss, but didn't hit our stop loss. Just shy. And at that point over there, we would have broken our TP zone right over there, which means that this would have been a profitable trade, a quick 24 pips, I think it was. Yeah, 24 pip win, and couldn't be happier with this move. Profitable trade. Let's continue on to a different example. Okay, we're on the New Zealand dollar and US dollar. We're on the 4-hour chart. We're seeing a downward trend over here. Let's draw our trend line. There we go. Alright, so does it apply our rule? One touch over there, close enough, but it still worked. 3 touches, which makes this a strong resistance line. Okay, so we're going to be looking to enter a short position, and what we're going to do, we would have entered it somewhere over there when we saw it hitting that resistance and coming down, say like that. ATR, which is average true range for those of you that don't know. Alright, so ATR, we're going to have one ATR stop loss. That's big enough. We're going to go 2.5. We could even go 3 if we're feeling confident on this trade. Let's see. 3.06. That's a good enough move for me. And yeah, 88 pip win and a 28.8 pip stop loss. So I hope you guys understand that if you do hit stop loss, you're losing 1 unit, but if you hit your TP, you're winning 2.5 units, which essentially means it will take a lot more losses to move backwards your account balance. Right, so we've got a basic trend line. There was no application of any advanced techniques whatsoever, which is a topic we will be covering in a later clip. Make sure you subscribe. Once again, hit the like button and go on this with us. So we've got this over here. We've got our position. We've entered the trade. We've gone short on a downward move. Let's see what happens. And we've come back to the resistance line over there. It hasn't broken, it's just touched it. But with our rule applied of 3 touches, it proved to be a strong resistance. It could be a breakout and it could hit our stop loss. At this point in time, you should not stress. Control your emotions. Don't close your trade thinking it's going for the stop loss. It is normal for a chart to move up and down. The value of the price, the current price, will move up and down. We've got confidence in our setup, and if it does hit your stop loss, you just look for a new opportunity, and we don't hastily or rush into anything based on emotion. We've done our analysis. We're confident on this trade. Let's see what it does. And we're seeing a drop in price, a little bit of a pullback. Let's see. Here we go. Right over here. It took our TP. Right. That is an 88 pip win versus a 28.8 pip stop loss. Alright. This was over, where was it now? Approximately 1, 2, 3, 4, 7. About 28 hours. It took 28 hours to hit this TP. Was it worth the wait? 100%. You got 88 pips in the bank. Right. So you don't earn money or make profit by exiting the trades necessarily. You earn it by being patient and by waiting. Some of these trades, bigger trades and on the higher time frames are definitely more fruitful in terms of the reward. Being patient is the name of the game. But if you can see here that we've hit another big one. I'll look for another higher time frame, bigger win on the next example. Stay with us. Okay, we're on the US dollar and Canadian dollar chart. We're on the 1 day time frame. We're looking for a nice big win, but we're willing to be patient. So we're just going to have a quick look here. Essentially, we can see a bit of an upward trend. Yeah, we've got an upward trend going here. Bit of range in motion here, but we're going to be looking for a buying position. And what I can see over here is we've got quite a strong support here. If you look at these moves over here, we got 1, 2, 3 touches, and we saw it coming up every time. We had a little fake breakout here, it came up, we had another fake break and it went up again in price. So this proves to be a strong support line, right? But we are away from the support line, so we're either going to wait till it comes back, or we're going to look at entering our trade depending on which way it goes. We don't rush into it. Let's see what happens. Here you see just on the next bar it's come plummeting straight down towards our support line, and on the very next bar got very close and we saw a bullish bar going upward. So this is where we would have entered our long position. We would have entered it somewhere right around over there, just for confirmation. Alright, something like that. And we're going to apply our 180R rule. You can see it's much bigger. That'll do. It's much bigger on the larger time frame, obviously. And in terms of a win, let's go big on this one. Let's see. We can take it to maybe 3.5, 4 times. This is not something we always recommend. This is just to show you, exactly how big you can win in this game if you do this correctly. Okay, so we've entered our long position over here. We're looking at a 367.7 pip win and potentially a 91.9 pip loss. Now, doesn't that just sound great in the ears in terms of risk to reward? It's just wonderful. It's definitely the way to go. Alright, so let's see what we're going to do. We're confident in the setup. We saw an upward trend. We predicted to go up. We also drew a very solid support line here. We've seen it bounce off of it with 2 fake breakouts, but a nice upward movement. Again, we've seen it come away. So the probability that this trade is going to be going up is on the higher side than what it is going to be going down and breaking this support. Okay. Just going to draw it for you again. Got 1 touch and it moved up, 2 and 3 touch, 4 touch, which was a fake breakout, 5 touch, which was also a fake breakout, and this got really close to the support and moved upwards in a nice bullish manner. So we took our position. Let's see what happens. Massive on day 2, day 3, day 4, day 5 broke the TP, took the TP and moved back down. Same for day 6, and day 7 is a nice reminder that we took a TP of 380 pips. Was it worth the wait? 7-day wait? Yeah. You could also have multiple trades going, guys. As long as you're using correct money management, you shouldn't be afraid of margin calls. Then definitely open up, a couple of these trades in a week, and you will definitely see your balance growing. This was a very profitable trade, a very successful trade. I'm very happy with this one. Alright, we've got our last example on the Australian dollar and the US dollar. Alright, what we see at this point here, the swing low, which is this point over here, we saw a reversal of the previous trend. We're moving in an upward trend, so we're going to be looking for a long position over here. What we do see is a strong could be. We need to watch this bar and see if it's going to break or bounce off. We're going to check it out. Let's look at this together. At the moment, we've got one, or let's call it 2, 3 touches. It does seem to be strong, but we're not entirely sure just yet. We want to open a position as close as possible to a trend line as we can. So we'd see here, we saw a little, hardly a fake break, and we've got a very neutral candle, a good tug of war between bulls and bears. We're not going to enter just yet because it could go either way. Once again, we're going to wait for the next bar's confirmation. As we saw a bullish candle in the next one, we would have entered a long position somewhere about over there. Alright, just put that there we go. And we are on the daytime frame, so we're going to go a little bit bigger. And we're going to just adjust to 180 our stop loss. Okay, that will do. That's a nice tight stop loss. Risk to reward ratio. Let's actually make it. Let's go 3.5. Okay, guys, it's important to not be greedy in trading. I always go 2.5 times, so a ratio of 2.5 to 1. I don't recommend going higher. And what I'm saying is not financial advice. It is not advice. I'm just giving you my opinion and what I personally use and what we personally use at ChartSmart Signals. We want to try and keep that ratio as sweet as possible without being greedy and without being foolish in terms of the stop loss. So let's have a look at what we got going here. All right, so we got a 302.4 pip win and an 85.7 pip stop loss. Now that is a really, once again, a good sound to the ears. I'm sure you would agree with me. Give this video a like if you agree with me. Hit the like button right now and make sure you subscribe. Once again, we want to keep you with us. We want you to go on this journey with us and create a solid foundation for your trading future. So let's have a look. All right, day 2. So we've got day 1, day 2, day 3. We came down on day 4. We're not getting stressed. We are confident in our setup. 5, 6 just touches it, and 7. So within a week again, it took our TP over here with pretty much zero drawdown, guys. Now zero drawdown is essentially moving downwards, moving into your stop loss zone over there, and moving down in the opposite direction. We had a little drawdown over here, but it quickly corrected itself and moved up in price, not to its entry, but definitely, not much of a reversal there, and a very profitable trade, definitely worth the wait. Once again, it pays to wait, guys. Be patient, be confident in your trade. This is the most simplest form of trend analysis, price action. It is effective, as you've seen. We will be going over more detailed or advanced techniques, and that essentially just means extra confirmation on the signal, extra confirmation on your prediction, which is what we really want. We want to be as sure as possible in terms of our trade. Obviously, with the advanced techniques, it does increase that possibility of your prediction. So, yeah, we will see you in the next clip. We will be going over some advanced techniques. I hope that this really helped you. If you have any questions, feel free to reach out to us via one of the many platforms that we've provided, and we will happily assist you. If you're not interested in getting started this time, you got to ask yourself why. You're losing out. Millions and millions of people are trading millions and millions of dollars a day, and most of them are actually relying on this as a primary source of income, a lifestyle that they've created and that they want. You're looking for something like it, you're just not sure where to start or how to start, reach out to us. We currently have free signals that we're giving away, a free signal channel, and there's great opportunity, there's massive opportunity. In fact, just get in touch with us and one of our happy support staff will get in touch with you and help you wherever you may need help. Great.